Welcome back to my YouTube channel. What's up, traders? So in this video, I'm going to be showing you guys my entry criteria, how I enter. You know, I've been explaining these concepts, I've been explaining these things, but I've never explained how I normally enter. I just say, okay, we clear this stop hunt, we sell. We don't just sell like that. You don't just sell from anywhere. I have certain confirmations I use, okay, before I try to um get involved with any position. I have what I look for before I try to get involved with any position. And I know where I set my stop loss, how I manage my trades and everything. So the November 17th trade, this trade cannot show on the 3 minutes time frame because my trading view is not subscribed. Okay. So I can just do some explanation for you, but then I'm going to use other examples like the 28th and the 22nd December examples to show you how I normally enter. All right. So during the London session, this was the entry for 17th December, 17th November rather. We cleared this high, which was a major stop hunt, and this was the previous day high. We cleared it, and you see the price drop. Now on the smaller time frame, around here you see a break of structure, an FVG, and a return to an FVG. This is what I mean. You're going to see stuff like this. This is a stop hunt. A low will be created on the 3 minutes. Price will return back up, break the low, return to an available FVG, and slide down. Okay, so this is the stop hunt, obviously, and this is a break of structure here. Can you see that? And yeah, most times there will be an FVG waiting there, the little one, and price trades into it. This is where we take our sales. So we take our sales from that FVG and we put our stop loss at the high to be safe. And then I aim for the next liquidity draw down or fair value gap down, depending on the market structure. But I try to scale in. So as my trade is going, I go on the 1 minute time frame. Whenever a structure gets broken, as it returns to fair value gap, I enter again. I keep entering till we get to our target. All right. So that's exactly what I'm trying to say. In case you might forget this, just do a screenshot. This is how I enter my trades. We're going to go straight into December 28th. Let's see on the 3 minutes so I can see it clearly. That's if December 28th is going to show. But it should. Okay. Now, this is December 28th on the 3 minutes time frame. So this is when we clear the high. All right. The major high we cleared was this, the previous day's high. Marked it. So what's the next step? The next step is looking for entry on the 3 minutes. So do you see what I was trying to tell you? The first stop hunt created a low, went up, broke the low, see it, created a fair value gap, going to mark it here, traded into the fair value gap, you see, and then dropped further. So my entry was somewhere like here, around 17.5 pips stop loss. And then you can see how price melted down. How many are? But I didn't catch all of that. But you see how massive it was. I closed out earlier. We see how massive it was. Okay, so if you can see 22nd December, I'll show you how I do enter too. Okay, London session trade, right? So 22nd December, when we retraced up, remember the fib on 1 hour was from this high to this low. This is the retracement. Before it fell, it did the stop point, which was that. And that's where I got involved. So look at this. Now, there are times when price will clear this low, as you can see, and will not return back instantly. Might do that later. I go on the 1 minute to get my entry. Meaning once a low is cleared on the 3 minutes, I'm even looking at my 1 minute already. Because you see these candles are formed here like nothing happened. On the 1 minute, price has returned to an FVG already. So basically, my entry is still going to be around here. It stops around here. And then you see how price is going to go down. Okay. A crash. Really, really, really deep. So this is basically how I enter my trades. Okay. If you don't want to make use of the 1 minute, you can still make use of the 3 minutes where it came back to an FVG here and slump. But I like making use of the 1 minute because sometimes price might be too volatile, might be too on point and refuse to return and just keep sliding down so you don't miss the moves. All right. Okay. So the best time frame, the best time frame to look for your stop on is the 15 minutes time frame because sometimes in the 1 hour, everything might look too, you know, too how am I going to put it? Not clear enough. So if you want to look for stop on, the 15 minutes is going to show you clearer. This is that high, and you see how we slide it up, and you see how we crash back down. The 15 minutes is the best. Okay. On this day, this was 3rd January, we had a win. And maybe I should do some explanation for this win also, right? So let's go. This will be the last for this video, just to make sure I give you my best in this video, right? 3rd January, let's see. 3rd January. Now, 3rd January is this particular candle, right? That black candle, bear candle rather, this one is 3rd. So we are going to ignore it like you're not seeing it and focus on the previous because let's assume we're analyzing and this has never formed completely. So I can know where price is heading to, right? So what made me stuck to a bear bias on the daily time frame that day on my channel was the fact that this was an order block. Remember, this is a daily time frame, so you have to mark out the order block, FVG, and all of this stuff. So let me first clean everything so I can be clear to you. This is an order block here. Okay. And this is a sell side liquidity resting. This is a buy side resting. This is a break of structure that happened that shows that we have flipped bearish completely. So you broke this structure, return back to order block. The next thing we have to see is a drop. Okay, no, this was for 5th January. Oh, this is 3rd January. Oh, sorry, guys. So I was analyzing for 5th January because by 3rd January, this order block just formed. It has not been, it has not been mitigated. Like price has not returned to it. The day price returned to it was on the 4th. Okay, and then price returned to it. So we are talking about the 3rd. Then price has not formed. What convinced me to sell or to be bearish on daily was the fact that here was still a sell side liquidity back then, not even a break of structure. Look at it, price was the sell side liquidity, the sell side. And let's say, like I said, you have to look at this thing from the perspective of the previous day. Make sure you don't think of it like you've seen anything. So this is a low. This was going to be a sell for me because I was expecting price to pierce through this and head towards this low. All right. So I've marked my fair value gap. I've marked them. Sorry, I've marked my sell side liquidities. I've marked them. So I had to tell myself, where am I? I'm here. Where am I coming from? I'm coming from a sell side, a buy side that has been taken out by this week. So I'm likely to slump. down, okay, or go up, because after taking that sell side, that buy side, you created another buy side liquidity too. So since I was here, it looks like it could still go up easily and it could still go down easily. So I just marked it and said, okay, my destination is either up or down. So it was a two-way on the 3rd of January. So looking at this from this perspective, 3rd January, let's see, 1 hour time frame. So we had an opportunity to draw fib this time. So we draw fib from the previous day high to the previous day low. Okay. Okay, sorry. From this was 3rd, so it was not previous day high, it was the high of the day. We could draw a fib from high of the day to low of the day. Why? Because we are clearly bearish and we broke internal structure here. Okay. So we are bearish. So draw a fib from this high to this low. So the price retrace, yes, price retrace higher than the equilibrium. Look at the red line, 0.5. The red line is the equilibrium, it's hidden. So it went higher than that. So I was looking for sales on this day because we went higher than the red line. So how am I going to see my stop hunt? How am I going to get involved? This is why I said the 15 minutes is the best time frame to see stop hunt and all that, right? So let's see. The 15 minutes, where did we see our stop hunts? So look closely during the New York Q zone, which I trade. I'm going to mark the line, the beginning of the New York Q zone I trade. So from here, New York Q zone was open. I had to wait for any stop hunts to act. So this was the stop hunts that happened. This little high was created and price took out this little high. Okay. So when price took out this little high, it's for me to look forward to my entry criteria, which will show on the 3 minutes time frame for sales. Okay. So the 1 hour actually made it clearer to me that it was sales. Remember, the daily was two-way. The 1 hour was clearer to me that it was sales. The 15 minutes showed me the stop hunt, and the 3 minutes gave me the entry. So it's a top to down analysis, right? So I took my trade after the break of structure. Okay. So look closely. There was a very little favor gap here, very little one inside there, but it was visible on the 1 minute. So I just had to wait for this low to get taken out. It was not looking good to me. It was so insignificant. So I waited for this one to get taken out. This low here got taken out and see price retraced upwards on the 1 minute. Let's see how it looks. All right. So the 1 minute is going to look clearer. So that's where I took my entry from. Okay. So this is where I took my entry from. After I cleared this first low, it came back up. I see it. It came back up and gave a nice entry. I think this was where I entered from. Okay, this lower side, I did not enter from here. All right, either here or here. I cannot remember vividly, but this is going to show you my. Okay, so I'm going to show you on the 3rd of January on my channel. So this is the end of the boot camp. I've been able to explain all the elements in smart money concepts, from buy side liquidity, sell side liquidity, explain other blocks, fair value gaps. I've explained daily bias, how I find my daily bias, how I look for stop hunt, entry, every single thing.
that shit back. Jamie on the beat, boy.
Well, if you follow this boot camp right to the end, click on the like button and subscribe to the channel, and you can look for the series of video in the playlist I made available for it. Right, you can share the link to your friends and on your social media, because this is one of a kind on YouTube. Okay, yes, there are not so many people out there trying to put out quality content to teach you forex by exposing everything they know. Okay, they just want to do half and half just so that you can buy their mentorship. But if you follow what you have been taught on this boot camp, practice it on TradingView on a demo account, and you can still ask questions on my Telegram channel, link in description. You can ask questions on the comment section on YouTube, and I'll answer all of them and make more videos to answer your questions. Okay, so that's all I have to say. This is the end of the bootcamp. Peace out, guys. See you in the next video.